Hello, everybody. Good evening. All right. Now, if you can hear me and you're joining me right now and live already, all right, early into the session, all right, do drop a note, say hello. All right, I'm more than happy to welcome all of you to my Facebook live sessions on Fridays. All right. This is Terence over here. All right. Or you can know me as I'm Possible Investor Terence. All right. And I host this session on every Friday, all right, as best as I can. All right. Now, so I do understand that, over the last few months, right, my name, all right, has been pretty common, all right? That means Terence Tan as a name, right, apparently has many, many different mentors sharing the same name, all right? But please be aware, all right, my expertise is really only in stocks, all right, and stock market options, right? That's what I've been doing for the last decade and more, right? And until today, that is what I specialize and that's why I focus in. All right, now, so please do not have any confusions with any others. All right, and I apologize because I can't do anything about my name. Yeah, all right, okay, now, so, all right, I'm the Impossible Investor. All right, so let's get started. All right, hi, Jimmy. All right, thank you for calling out my full name. All right, is there still a lot of echo? All right, because I don't know what's going on over here. All right, now, so is the sound okay for most of you? Okay, all right now. So let's get our session started and moving over here. And all right, in this session today, all right now, I hope my screens are back on. It's very clear right now. Okay, it is something to do with all right the Google Chrome, all right, and all their new access to sharing screens. All right, I think it's specific to Mac. All right, so that's pretty much the issue last week. All right, I managed to get it settled out. All right, and we are back to normal operations this week. All right, now, so I do apologize once again for what happened last week. All right, I didn't expect it, probably some updates, all right, but we're back to normal. All right, now, so without further ado, all right, for those of you who are new and joining us today, all right, do watch the banner on the screen. All right, you'll see this thing called the streamyard.com/Facebook. All right, if you have not done so, please go to the link itself. You will see a Facebook button. All right, press on the button so that you approve your Facebook profile, all right, for the StreamYard app itself. All right, so what you'll do is when you leave comments during the session, right, we will be able to hear, all right, thank you very much. All right, I will be able to see your profile, all right, and address you accordingly. All right, now, so without further ado, all right, let me take out the banner before I get scolded by many of you again, all right, for being forgetful. All right, now, so do remember as well for the disclaimer, all right, I will be talking about live trades. I will be sharing trades that I'm doing. How do I see the markets? But please understand that by no means these are any form of personal recommendations, right? You need to be aware of your risk. You need to be aware of your, risk appetite because all trading, all investments bears a risk of loss, right now. So let me state my objectives for these sessions every Friday, right now. There is only one objective by doing this every single Friday, right? That is to try to reach out to as many of you who are thinking about investing in the stock market as much as possible. Right, so both non-members as well as members alike, all right, whether you are in my community or not in my community yet, all right, you are entitled to join me every single Friday, all right, and during the session, if you do find anything that I share useful for you, right, and maybe your friends as well, right, do help me click the like button, all right, and also hit the share button, right, and tell some of your friends, right, what they can gather from this session. Yeah, all right. Now, so, I can only do as much as I can, all right? But for the rest, all right, I do seek your help and your support over here. All right, now, I have been running this session for over a year now, all right, okay? And we have hit a 17% return on our first year, right, despite all difficulties in the market. All right, what is our investment strategy? All right, we are targeting, all right, only on good, strong stocks. All right, we are targeting, all right, on a portfolio-based investment. Right, and I say this very clearly again, it's an investment strategy, right? It's not a short-term trading strategy, right? So every trade that we get into, every stock that we trade on, right, will always come with a long-term plan, will come with a long-term outlook, right? And my strategy of choice is to sell options, right? So instead of going out to buy the stocks, right, I prefer to sell options instead. Why? Right, I'm targeting what we call the right companies, right? And they are more often than not the good companies which have already monopolized, right, the business or business sector that they operate in, right? So one thing you will not get from them, right, is pretty much explosive stock price movements, right? But one thing you also get from them, right, is price stability, right? And more so, and even more so, right, if they have not been showered with love by the markets. Yeah, okay, all right. So this is our objective, this is our aim, right, for the companies that we trade on, right? And for this specific reasons, right, we do believe that selling options, right, or what we do specifically called portfolio puts, right, is the best adopted strategy to gather the biggest returns, right? So what's our aim? Our aim is to hit a double-digit return, right, and more so a 20% returns per annum target, right, on a consistent basis. All right. Now, why are you only aiming for 20%, Terence? All right. Can't you aim for more? Right. You can. All right. But please remember, right, for the way we sell portfolio puts, all our trades, every single one of them, all right, is put up with full cash. All right. Full cash needed to buy the stocks, right, in any case of events. Yeah. All right. So my cash is always prepared to pick up the stocks if I need to. Right. So this keeps my portfolio safe. This ensures that I will never overtrade. All right, I'll never run out of money, right, if I have to buy those stocks. All right, now, so this is one of the safest approach you can use, right, when it comes to selling options, right? Is there a downside to it? Yes, there is, right? There is the need for capital, all right, okay? And as you know, right, the need for capital is exactly the same as buying shares, right? And buying shares, right, isn't exactly the cheapest strategy or the lowest investment strategy, right? So both the goods and the bads are weighted out over here, right? But you cannot doubt when you do this right, it is one of the most lucrative, right, and yet the safest strategies out there, right? And what's on top of that? It doesn't require a lot of your time investments. Yeah. Okay. Now, so with that, all right, I'll get today's session started. Right. If you'd like to find out more about what we do, right, and how you can improve your returns, right, or do more short-term trades as an option seller, right, do seek out my team, right? Do send them an email, right, for one of our mentorship programs available. All right. Okay. Now, so that's it. All right, let's get started. So I'm always going to start with my version of the market outlooks. All right, so without further ado, let's go to look at the markets together. All right, and what do I see? All right, and what do I expect out of the markets? All right, now, so what you see right now on the screen, all right, is the TD Ameritrade platform, all right, and the charting function. All right, now, so what I have on the screen right now is the SPX chart. All right, the SPX is basically the S&P 500 index. Right now, so I've done this week after week after week, right, which is to show you the resistance and support levels. Right, so what we have was a downward channel, right, from the start of the year as the S&P started to head down. Right, but what's happening right now is as of last week, right, we had the breakout. Right, and I did mention before, if we do have a breakout over here, right, it will lead to a lot of short covering. Right, because a lot of traders would have gone short during this period. Right, so once the burst out happens, right, all of them are rushing to cover, right? That's why we see this explosive movement over here, right? And something else I want to show you, right, is that this movement over here, right, is pretty much orchestrated, right, by the computer trading systems. Right now, of course, some of you are going to ask me, Terence, how do you know that? How is it possible to see that? Right, you actually can. Right, to do so, all you need to do is to narrow down the time frame of the chart you're looking at. So what we're seeing right now is a daily chart. All right, okay, what you can do is to first narrow it down to, for example, a 4-hour chart. All right, and you would see that since the market has gone up, right, can you see how steady, right, this buying up has been over here, right, in the last week alone, right? These are 4-hour charts over here, right? So this move up would have represented from Monday all the way until today, right? Now, so if you have a normal market, a market that's participated by humans, right, what do you expect to see? Right, you expect to see emotions. Right, what do I mean by emotions? When I have profits, I'm going to take it. Right, and when people take profits, you will have the dip. Right, and then you have the bounce. All right, and then a dip, and then a bounce. Not when you have computers. Why? Right, simple. Computers are operated with programming codes. Right, how do you think these programmers are going to write the codes? Right, very harsh. Right, which means it's either 1 or it's either 0. Right, so if they are asked to chase the indicators, when the indicators show them that it's bullish, right, they're just going to keep hitting the buy buttons. Yeah, all right, they're going to buy, all right, get out, buy, get out, buy, get out. All right, they're just going to keep doing this. Right, and you can see this consistency of the buying up over here. Yeah, all right, now, so this is one way to spot, right, when you see the algorithms, right, in the markets and playing. Yeah, all right, okay, you don't have all these kind of ebb and flows as you see over here. Right, selling, all right, taking profits, selling, taking profits, right, and then selling again, right, taking some profits. You don't see it over here. Yeah, all right, okay, so that's something of a telltale sign. All right, now, so off with the education of here. Let's get back. So what do I expect out of the markets? All right, I don't really expect a lot more upsides from now. All right, so if you think that you want to chase this market right now, I need to tell you something. All right, you shouldn't. All right, why shouldn't you? Simple. Oils are going to stay very high for a while to come. Right, because when asset classes like this, right, actually does a burst up, yeah, right, there's a limitation to how high it can go, right, because oil has pretty much hit his historical high level, right, and I've told this to my members as well earlier this week, right, please do not expect oil, right, to go shooting anywhere higher anytime soon. Why? Because it was an exponential move. All right, and that exponential move actually matched up with the historical high over the last 20 years. Right, but the situation for oil, right, and the demand for oil has changed drastically. Right, it was much more of a necessity 20 years ago as compared to right now today. Yeah, all right. So this is pretty much manufactured by certain events that are unfolding. All right, and yes, we do have inflation in the markets, so it's going to keep it high, right, but definitely not at these kind of crazy excessive price levels. Right, so I do expect it to kind of correct down, right, but stay at a high level, right, for quite some time. Right, next, we do have inflation, right, that's happening and rampant, right, not just in America, right, but even the UK itself, which announced, right, this week alone. Yeah, all right, okay, they pretty much see the inflation that's happening, right, and they come out right and say it, right, and they massage the numbers much lesser than America. Yeah, all right, so what they tell you, all right, is very, very dire as well. They're looking at it pretty much a 6% inflation, all right, okay, now that's pretty bad. Yeah, okay, now, so even America itself right now is 7%, right? But actual fact, all right, it's much, much higher. So what did the Fed do, right? The Fed's hands are pretty much tight right now, right? Fed meaning the Federal Reserve, right? They have no choice right now but to start raising interest rates. And the worst part, they can't stop, right? Because inflation is out of control. So the only way to bring inflation back into control, right, is to slowly start raising rates. Right, so gone are the days of cheap capital. Gone are the days of zero interest. Right, why? Because they cannot afford to do so. If they continue to float cheap money, right, inflation is going to get worse and worse and worse. Right, okay, that's how economics work. That's what's happening over here. All right, so their hands are tied and they have slated for 6 interest rate hikes. All right, and every interest rate hike, all right, as it gets higher, is going to hurt the market. All right, okay, now, so what we have right now is all this buy up, right? It's hitting the next resistance level at about 4,550, right? Which was something that we drawn out, right? It's getting closer and closer to that level. Yeah, all right, now, so be very wary if you are thinking about chasing the market, right? You should never chase if you're already late to the game, right? If you really need to get in, yeah, all right, you should be getting in after some form of a correction, all right? But Terence, all right, can you still do trades then? Yes, you can. When I say don't chase the market, I mean, right, if a market is overvalued, right, you don't chase it by trying to go long on equally overvalued stocks. No, you don't do that. Right? Why? Because when the market corrects, all these expensive stocks will follow the market. All right, so that's the problem. All right, so not now. All right, now is not the time for you to go and buy companies, right, like Microsoft. Now is not the time for you to go buy companies like Apple. No. All right, are they not good companies? They are. All right, they are great companies. But you must understand one thing. All right, the time for Microsoft, right, to grow and make a lot of profits, right, has come and gone. All right, okay, and now Microsoft is still trading at 32 times earnings. Right? Do you see Microsoft growing at 30% per annum? Right? Do you see that they have the avenue to continue growing at 30% per annum? If you don't, right, that shows you a sign that you're definitely overpaying, right? Even though prices have already corrected, but it's still expensive, all right? And if the market goes any lower, right, this stock is going to go lower together with it, all right? Okay, so is Apple as well, all right? Yes, Apple has also corrected, all right? Okay, now, but it has strong bounce over here. So number one, after this strong bounce, you should not be chasing it, all right? And number two, all right, we all know Apple's earnings capability, right? But there's a problem. Apple is definitely not growing at 30 times as well. Yeah, all right. Okay, now, so it's not growing at 30 times its earnings. It's no longer the Apple that we had 5-6 years ago. Yeah, all right. Apple is now stable, it's pretty much a mature company. Yeah, all right. Now, so barring new product range that can exceptionally create new profits for them, yeah, all right, it's pretty much going to grow at a stable pace of maybe 10%, 15%, definitely not at 30. Yeah, all right. So these are the stocks that I'm talking about that you should not be chasing, right? If you really need to get in, all right, okay, especially right now, right? But it doesn't stop you, right, from chasing companies that can still attribute strong profits, right? That means companies that are still earning good money, right, but have not been participating together in the markets, right? That means while the market is going up, right, their prices stayed down, right? As the markets came down, right, their prices didn't move up by a lot, right? So those are your golden opportunities, and those are opportunities that always exist, right, every single week, every single month, right, when you're talking about the markets. You just need to know how to find them. All right, okay, now that's what we're doing over here every single Friday. Okay, now, so if you have learned a little bit of something over here based on what I've just said, or pretty much nagged about, right, if you found a little benefit out of it, right, please leave a comment, all right, and let me know if you like what I said over here, all right, and if it made any sense to you at all. Okay, now that my nagging session is over, right, let's get to the monitoring of the trades that we have currently. All right, now, so let's go to our portfolio, okay? Now, so because my screen is limited in capacity, right, so I'm going to put my portfolio below, right, and the platform, all right, slightly on the top, okay? All right, now, so for the portfolio, let's go to our first position, right, which is an assigned stock, right, position that we were assigned on since 17th of September, right, and we're still stuck with this stock. Right? Am I worried? First, let me tell you, I'm not. Right? Why am I not worried? Right? Because if you go look at VZ, right? While I'm stuck with this stock, right? But right from September until now, right? I've been enjoying the payments of dividends, right? Which means even if I have to drag this out, right? I'm still gonna make about a 5% return, right? Holding on to the stock itself, just from the dividends that I'm being paid. Right? So can you see the benefit? But I'm not just sitting on dividends. All right. Why? Because at the same time, all right, can you see while our first trade, the portfolio put, was assigned to us, all right, over the last few months, right, I've been selling call options on them, right, with the last one expiring on 18th of March, right? Now, so that has already helped my total collection available, right? And now my break-even price on ownership of this stock, right, is no longer 57.50. Right, my cost price of the stock to me is only 53.76. Right, so that's definitely one plus for me. Right, so while pocketing the dividends, which I'm not accounting for here, all right, okay, that's already mine, that's in my pocket, right? But the premiums I've collected by being a seller, right, has allowed me to bring down, right, my break-even price level. All right, so let's go add some cash today, all right, on VZ, all right, while knowing that our break-even price is around 53.76. All right, now, so I'm going to go to 14th of April. That's going to set me back about 20 days or about 3 weeks. All right, and let's see what we can get. Not a lot of premium over here. All right, now, so what if I go out to 20th of May? No, not a lot of premium as well. All right, now, so for that reason over here, we're pretty much going to stay still. All right, okay, and let's go have a look. Yep. All right, okay, now it has suffered a little bit of a dip recently. All right, okay, so I'm going to hold on for the stock to bounce back a little, right, before trying to get out of here. Okay, all right, now, so I'm going to hold on to this stock position for a little bit longer. All right, so no actions today. All right, okay, because it makes more sense for me to wait for a bounce. All right, because the stock is trading at a support level right now. All right, so if you look at it, the stock is actually at the last support level. All right, so it does indicate to me, right, that it's better off waiting. All right, and it did pop today. All right, so that's also another sign for me to wait a little bit longer. All right, now, so that is out. Let's go to our next stock trade. All right, there's eBay. All right, so we are also assigned eBay stocks at a price of $60. All right, okay, but based on all our premium collection, right, the cost of our shares is only $57.50 right now. Okay, but we do have a 14th of April 14th of April covered call, which is due to expire. All right, so I can't do anything right now. I'm just staying put. Yeah, okay, all right, so no actions on eBay as well. Now, our next position is on Facebook. All right, so what has Facebook done? We have a 230 put, which only expires on 20th of May. All right, 20th of May. So let's quickly go to Facebook over here. right? Now, as we entered the trade, right, all of you can clearly see the stock continued to roll lower. In fact, all the way to 185, right? Now, and that is where I keep saying, right, when we build this portfolio, we have a long-term focus on the companies that we select, right? So as long as we believe that the companies is strong enough, right, I would find a trade that makes a lot of sense and I'll go with it. What's the worst case scenario? I end up owning the stock, right? So as an owner of the stock, I have to believe in the long-term profitability of the company and as a business, right? And we have no qualms about Facebook, right? But I have worries right now, temporarily, about its identity. It has somewhat of an identity crisis. Is it Facebookers or is it Metaverse? Yeah, right. What do they want? Right? Because with the market slipping and sliding right now, it is not the best moment for you to have an identity crisis, right? But okay, no doubts about their marketing revenue, right? Ever since they have, pretty much opened their advertising campaigns, right, on their Facebook platform itself, right, it's generated them a lot of revenues, right? Okay, so their profitability or their ability to generate profits cannot be doubted, right? So that's what I want to say over here, right? Now, so of course, right, it start to settle, right? It's break back above the last resistance, right? So this stock may see a little bit higher from here. All right, so we are still fine. All right, it doesn't expire to at least another 5-6 more weeks. Right, we're pretty much very close to our strike price now. All right, so nothing to be done for this position. All right, now next one over here. All right, Andy. All right, now so Andy over here is asking a question. All right, Andy, just a quick answer to your question over here. All right, yes, it's definitely trading at a support level. So if you don't have a position on VZ, all right, it does look like an interesting start. All right, sorry about that. Okay, but right, as you see in the portfolio that we're building every Friday over here, all right, I do have an existing stock position. All right, so I'm not about to over leverage my entire portfolio, all right, on one particular company. I would like to keep it balanced out. All right, so I'm not going to double trade the same stock over here. Okay, all right, now, so I hope that answers you. Now, next one over here. All right, let's get to our next trade, all right, which is WBA. All right, so we have a 14 April expiry, 45 puts, which we collected 160. All right, so let's go to WBA over here. All right, now, so the stock has bounced up a little. It's 47.46. So we have a 14 April 45 puts, right, which is costing about 73 cents right now. All right, so about 73 cents. Okay, now, so the premium is still almost close to about 45% for about 3 weeks left. All right, so I think it's fair enough, all right, for us to keep this position. All right, I still like, all right, the upside on this stock. All right, the stock is still very cheap, trading at 6 PE level. All right, so it's definitely still very much undervalued. All right, so I'm more than happy to stay, right, with so much premiums left on the table. All right, so we're going to keep this position, yeah? All right, now, next one, all right, Intel. All right, now, Intel has made a sharp move, all right, over the last couple of days. All right, so it makes a lot of sense for us to take the profits off the table. All right, so we have done a $45 put on Intel, all right, and we can close it for just 14 cents today. Right now, and that would mean that we've collected the bulk, right, of all the premiums available, right? So I'm going to go ahead and close this for 14 cents today, okay, everybody? Right, so let's free up some capital, right, and use it for better trades. Okay, now, so 14 cents, right, it's closed today on the 25th of March, right, and we can free up $13,500 that we're tying up. Okay, right now, so all's good. All right, now, next trade over here, another winning trade, actually. All right, now, one good thing about this portfolio over here until now, all right, which is about, we started on August last year, all right, so we're about almost close to 18 months right now, all right, we have yet to suffer a losing trade. Yeah, okay, so that's the thing you should like about a portfolio that you build something like this, right, especially on the right companies, right, you don't have to take losses at all, right, so if you're looking for something like that, right, do track what we do every single Friday, right, or come on board, right, and start trading live together with me and my trading partner, right, twice every single week, right, if you want to explore the world of option selling. All right, now, so next up over here, what's the next position? All right, EAT, all right, EAT, all right, so let's go to EAT. We have 14 April $35 puts, right, so what has EAT done? All right, EAT, oh, it's fallen today. All right, 14 April, $35 puts is worth about $1.10. All right, we're still profitable. All right, okay, but if it didn't fall today, all right, I might have taken the opportunity to take my profits. All right, but so be it. All right, we managed this, in a non-time consuming manner, in a pretty much laid off manner from the markets. All right, so today is not a good time to close this trade. All right, so we're going to leave it over there. All right, but today, all right, I'm actually planning to add 2 new trades to my portfolio over here. All right, so let's go with the first one. Okay, all right, everybody. All right, so let's go to our first trade today. All right, and the first trade I want to add today, right, is another defensive company. All right, I'm going to add Tyson Foods to my portfolio over here. All right, why? Because food is a staple. All right, food, all right, is something that people will need to keep spending money on. Right, whether interest rates are high, whether interest rates are low, it's not going to affect, all right, how this company makes their money. All right, now next part, right, the company is trading at an 8 PE. All right, okay, 8 PE, that's very, very cheap. That's very, very desirable, all right, in a market that's still so expensive. Yeah, all right, now, and plus, you realize that the stock has already fallen, right, pretty much from $100. So the stock has fallen by almost close to 20%, all right, since the start of the year. So why not? Yeah, all right, why not? Okay, so I'm going to add a portfolio put position over here. All right, so let's go. Okay, let's go. All right, now, so what am I aiming for? Let's go with 14th of April. All right, since there's something available. All right, let's go with the 85. All right, I'm going to take the 85 over here. Why? The worst case scenario, I will have to buy this stock and pay $85 a share. All right, but I'm happy to do that. Yeah, okay, now let's value up some options as well. 3 weeks, I can get paid about 135. All right, now how about if I go to 6-7 weeks? All right, okay, now I can get myself paid about 296. This seems like a better play. All right, let's go with the May then. All right, okay, because this seems like richer in premiums. So let's go for the May. All right, and I'm going with the $85 put. All right, so let's go with it. All right, so I'm going to trade my 3 contract size as per normal. All right, and I'm going to try this today. I'm done. All right, I've decided to try this for 310, right? And it was filled over here. Right now, so just to verify this, right? The platform time, right, is right at the corner, 2158. Right, so to verify 2158, all right, I got filled on TSN May expiry, right? 20th of May, $85 puts. I've sold 3 of them, all right, for a premium of $3.10. All right, okay, so I'm happy with that. All right, $3.10, right, added to the bag. All right, so let's do a quick calculation over here, right, on how much we have just gotten. All right, let's trade number 99. 99. All right, we're almost close to 100. All right, now, so this is on TSN, all right, a portfolio put, which expires on 20th of May. All right, this is $85 puts, all right, on the 25th of March. All right, we collected 310. All right, now, so that's going to pay me almost close to $1,000 in cash flow. All right, that's all good. And $25,500 tied up, right, in terms of capital requirement. All right, now, so that's tied up over here, that's put up. All right, and let's see, what else do we have? I did have one more. All right, but it suddenly slipped my mind. What was the next stock? Oh, man. Pardon me as I go silent for a minute. I'm trying to think about which stock, right, I had on my mind earlier. No, definitely not ammo. Oh, man. Oh, yes. All right. Okay. Now, yes. All right. I just remember the next stock I want to add is going to be pretty much on the cheaper side. All right. I'm going to add another telco, everybody. I'm going back with AT&T. All right. Why? All right. If we look at the valuations, 8 PE is not exactly expensive. 8.7% dividend return. That's exceptional. All right. Okay. Now, next on the charts. All right. Now, it has kind of plateaued over here, right, on the sell-off. right? And now it looks like it's ready to go on the move. Yeah, all right. Okay, now so it has bounced off, this support level over here, all right, which seems pretty strong, all right, with the next one at a low of $22. Yeah, okay, now, but we have a potential resistance, all right, at about 24. All right, so right now, okay, I'm comfortable to be a willing owner of this stock. All right, so if anything goes wrong, all right, I'm gonna keep the stock. All right, because anyway, it's gonna pay me like what, 8% dividend return. Yeah, all right, so I'm happy with that. So let's go with that. All right, I'm gonna take a shorter term trade to 14th of April. All right, so let's do a $23. All right, a $23 put. Okay. All right, okay, let's do a $23 put for April. All right, now before we jump the gun, all right, let's look at how much we can collect too. All right, okay, let's do a comparison. All right, 2368, all right, versus 2032. So you can see right now, this one, right, will make the shorter term trade, right, much more lucrative. Yeah, all right, so always do a comparison, right, to see which one, right, actually pays you more, right, for the time frame you're trading. All right, so April, $23 puts. All right, so I'm going to take a normal 3 contract position. All right, how much we going for? All right, no negotiations required. All right, we can just go with the bid and ask. All right, done. Yeah, okay, now, so I just sold 3 over here. All right, 3 of them, AT&T, sold 3 at 32 cents. All right, so we're done. All right, now, so let's go ahead and record it as well. Trade 100, we broke the century mark, everybody. Thank you for all of you, right, who have joined me since the very first trade we've done, right, until right now, okay? All right, now, so 3 trades on AT&T, right, portfolio put for 14th of April, right, a $23 puts for how much? 32 cents. Right now, so that's gonna pay me only about $100, but it's still an extra $100, and it only ties up 6,900 in capital. Right, so right now I'm pretty much fully exposed into the market. Thank you very much, Adrian. Right, we are at 100 right now. So I really do understand, right, where people who are not within our community. Right now, you will have doubts, right? Okay, because there are so many others, right, who will show you Excel sheets, right, like what you see over here, or maybe even Google Sheets, right, which leaves you in doubts whether these trades are done, right, live or not, right? But for those of you who have followed me since the very first day, right, you know that these sheets that I'm using over here, right, are done as a form of records for all the trades that I've traded with all of you, right? So, as much as I want to say over here, this is verified information. Right, okay, because if you want to verify it, you can just go back and watch every single Facebook live session. Right, so this is something that I do, right, with my trading membership members as well. Right, we do keep an official Excel sheet, or not an Excel sheet, but we keep a Google sheet, right, where all my members get access to the trades that we've traded on. Right, that actually forms, right, our official track record. Right now, so that is something that we always honor, right? And we record down all the details, right, of all the live trades that we get into. Yeah. Okay. Now, so with that, let's go calculate the ROIs on this trade before we wrap things up. Right. So for our first trade, TSN, right, we collected 310 on an investment of $85. So this trade makes us 365, right? 3.65% return, right? But this option expiry comes for 56 days right now. So if we take 56 days divided by 7 days a week, this is an 8-week trade. All right. So to annualize the return, I'm going to divide it by 8 weeks and then annualize it with 52. Right. So this trade brings in 23% return, right, which is still right within our target mark. Right. It's actually more than our 20% target. So this is a good trade. Right now, what about the next one over here? Right, AT&T. Right, we're making 32 cents on an investment of $23. This is 1.39%, right, for only 3 weeks. Right, so it's a 24% return as well. Right, so it is another trade that also hits our target mark. Yeah. All right. Now, so as you see, we're pretty much very, very consistent over here. Right, we're always looking for options where it pays us, or the trade that we take actually pays us an annualized return of around about the 20% mark. Why? Because as an option seller, right, you don't hit your target with one trade, right, you hit your target with multiple small little steps, right? So if every trade that I take, right, is within the annualized return that I'm targeting for, right, that means every time I make a trade, I'm actually getting one step closer. All right, now, so that's how we build the portfolio step by step, trade by trade over here. All right, now, so I'm done with the trades as well as the portfolio actions I'm going to take today. Right, but I do still have some time before I can wrap things off. So if any of you have some questions you want to talk about or ask me about over here, do go ahead and leave your comments over here. Okay, all right, now I'll be more than happy to help you out. Right, if it's within the context of this session that we are running today. Okay. All right, now, so if any of my trading members are joining me, all right, do remember, all right, this is a public session, all right, so if you have, questions related to trading memberships, yeah, all right, do send them out, all right, during our live sessions, all right, and not here, okay? All right, now, so there we go. I knew that was going to come out, all right, and I already said it, all right, now, so do remember to throw this question to me, right, during our next Monday live session, right, but I already have the answer for you. Right, okay, you just need to go and watch the course modules, right, which we have already put up in your members portal. Yeah, all right, okay, now, so look out for the options income blueprint that will cover, right, exactly the difference that you're looking for. Yeah, okay, all right, now, so one, the biggest starting difference, right, is that for whatever I do today, I'm setting aside the full cash requirement, right, to pick up the stocks, right, in the event anything happens or anything goes wrong. Right, okay, but for the trading strategies in our memberships, right, okay, we can actually do the same kind of trades, right, but with a much smaller capital requirement. Yeah, all right, so an investment strategy versus trading strategy, right, so that would be the big answer for the question they're putting out. Yeah, anybody else? All right, welcome. Right, I do know that there's a little bit of a lag over here on the StreamYard software, right, versus the Facebook Live feed. All right, so I'm going to hang on for a couple of seconds over here to see if there's any more questions that are going to come in. Okay. All right, Desmond. All right, how about 5G stocks? All right, now I hope that what you're talking about over here in terms of 5G, all right, has to do with the 5G technology in the form of telecommunications. All right, so very simple. What about 5G? Right? Is it proven? Right? Is the profit stream something that is already proven and happening for a long time to come? Right? Or right, you're pretty much looking at short-term growth companies again, right? Because as an option seller, right, especially when you do this from a portfolio angle, right, looking for short-term growth companies, right, can do well for your portfolio in the short term if you get it right. But when you're on the wrong side, right, you can be slapped, right, hard on your face over here. Right, let me just quickly show you an example, right? Okay, because many of these kind of hyper growth stocks. Hang on a minute, let me find my mouse first. My mouse ran away. All right, now many of these hyper growth stocks, right, were big beneficiaries, right, during the pandemic, right? Okay, so one stocking company over here, right, as you can see over here is DocuSign. All right, now because if we break out the 3-year weekly chart of DocuSign, what happened after the pandemic? You went boom. All right, okay, but just as the way it went up quick, right, it lost the same kind of amounts very quickly. All right, is this, can you imagine if you get caught on the wrong side of it? Yeah, all right, okay, now that's going to be a dilemma over here, right, and that can literally kill your portfolio. Why? Right, because if I have to own this stock, right, I can tell you right now, I'm never confident that it can actually go back up, right, to this price level. It won't, all right, because the profits that it makes is not proven. Yeah, all right, it's not proven. It's not something that they've done for 10 years, for 20 years, for 30 years, right? And more so, I cannot see the product that they're selling, right, being able to generate these kind of consistent sales, right? So that's a problem, right? That's why you realize a lot of the companies where we trade, right, are pretty much what we call utility-based products, all right? Okay, that means the things that they sell, the things that help them make money, right, has formed a utility status. It is a must. It is a need. Right, it cannot be escaped. Right, so that's what we do over here. Yeah. All right. Now, Facebook user. All right, now, if you haven't gone to StreamYard over here, right, you might need to go to StreamYard to hit the button so I know how to address you, right? But, all right, Jimmy has already posted out as well, right? Do send our team an email, right? My program manager will be more than happy to guide you, right, and tell you about what we have to offer, all right? So the email address is b@impossibleinvestors.com, all right? Okay, b@impossibleinvestors.com. Right? It's also a very different kind of email because I do wish that every investor that comes through our hands, right, can be, all right, that I'm possible investor. Yeah. Okay. All right. Now, so in the next question, all right, Nicodemus. All right. Okay, Nicodemus. All right. I hope I pronounced your name right. All right. It's a very unique name. All right. Is the current market a bull trap before backing down? Simple. All right. I can't tell you whether it's a bull trap or not. Okay, but I can tell you the odds are definitely against it. Why? Right? Because if you join me early in the session, right, I said this very clearly, right? Inflation, right, or hyperinflation is out of control. Number two, the only way to control it is to keep raising interest rates. All right. Okay. Number four, right? Raising interest rates is never ever good for the markets. Right? Why? Because cost of capital goes up. People will borrow less. Right? And when people borrow less, the economy slows down. Right? There's less money flow. Right. Okay. So all these are the tailwinds, right, of what the market is facing. All right. Okay. And plus, the market does need to correct itself. All right. Okay. It does need to correct itself. Right. And no markets go higher or break new highs in an interest rate hike environment. Yeah. Okay. All right. Now you do need to understand that. Okay. So Nicodemus, I hope I answered your questions over here. All right. Now, so next one over here, Pangsin, is Calyx good to go in? Right now. Join us in our membership. All right. I may be looking at a trade on this, right? But definitely not today. Why? Because my portfolio right now is already fully exposed, right? So I can't add any more over here, right? Now, look, my capital use right now is $117, right? My account right now has only about $122,000. Yeah. All right. So I'm pretty much as safe as possible. All right. So I'm not going to overtrade this account. Yeah. Okay. All right. Now, so whether Calyx is good or not, all right, if you're already a trading member of us, join me on my trading session next Monday, right, which I do live every single week with our members, all right, and let's access it together, all right. I'll be more than happy to do that. Okay, now that seems like all the questions that we have over here, all right. I'm just going to do a shout out one last time over here. If you find anything that I shared useful to you today, you picked up one golden nugget or two, or maybe even more, just help me click the like button on Facebook before you leave. All right, okay, or all right, hit the share button as well. All right, if you could do any of these or both of these, all right, I'll be very, very grateful. All right, so with that, I'll bring this session to a close today. All right, I'm happy that the software is back on and functioning as normal. All right, and I'll see all of you next Friday. Okay. All right, so bye for now. All right, this is I'm Impossible Investor Terence. See you next Friday, everybody. Bye.